Good morning, everyone. Welcome back. Welcome back to another red hot covered call video. Hey, look, if you're interested how I deal with an ongoing horrible trade, then you've come to the right video because I'm going to show you how I'm dealing with PSX, and I'm not happy. Hey, look, thank you for coming to my channel. Thank you for banging that subscribe button. If you like this video, you want to hear the next one. The next one I do, you'll get an email notification if you ring that bell. Ring the bell. And hey, bang that like button. Let me know you like what I'm doing. That motivates me to do another red hot cover call video. Boy, I'll tell you what, let's get into it, okay? I talked about this probably a month ago, maybe even more. Talked about PSX. You know, PSX is one of my favorite stocks that I like to write covered calls. Why? Because they're a great S&P type company, right? They're in a business that I like where they refine other people's products, right? They're a oil refiner. They make money off of other people's products that most everybody uses. So they're always going to be in business, is the way I see it. And they pay a decent dividend. So if I'm holding a company like PSX, you know, I'm going to collect that juicy dividend. And quite frankly, it's a pretty stable stock, in my opinion. Okay, so it meets a lot of the golden rules that I like to have in place for when I purchase a stock for a covered call right. And, you know, if you watch my videos, and let me just reiterate it. This is a 5-year chart of PSX. And look how steady that is, okay? And because they're in a somewhat volatile market, oil, commodities, you're going to get some nice premiums. And by the way, look at that beta. That beta is actually under 1, which means the volatility is there. But it's not too outrageous, you know, where we get we get ourselves in a spot where we overreach for the big premium and get stuck. So I like everything about this setup with PSX, okay? So where did my trade go wrong? Let's set this up. So back, PSX had rallied up, okay? And I've been watching it. I wasn't holding the position, so it was rallying up. And I said, hey, look, on a nice pullback, I'm going to go ahead and pick me up some shares, okay? So this is a 1-year chart. And, you know, I'm drawing lines of support just like everybody else. You know, when it falls down and I see this nice little line of support here and we get this little bounce right here. Hey, I ain't going to profess to be a technical expert here. But I do believe a chart tells 1,000 stories. So I'm looking at my chart, right? I think there's a opportunity to buy right here. Oil is, you know, moving from 40 to 50, right? News is coming out that Saudi Arabia and all the OPEC players are going to play nice, let the price of oil go a little higher. And with that, you know, all high tides rise all boats, right? So you're going to get the refineries moving higher, the oil players higher. This is my opinion. Well, look what happens as I buy right here, right? As I buy right here and I write a couple covered calls. I'm going to go to my spreadsheet here real quick. We'll get back to that. But notice here, I write a couple juicy covered calls and I'm feeling good. We'll come back to the spreadsheet here in a minute. But I write a couple covered calls. I collect the dividend, man. Life is good. But then look what happens. You know, when I write these covered calls, you'd think there would be downside protection, right? All the money I made could theoretically be used for downside protection if I had a stop. I did not have a stock, right? Because I'm going to play PSX. I feel comfortable to own PSX in my portfolio. So as it falls, yeah, I'm left holding the bag short term, but I'm going to hold PSX. You know, if this was a highly volatile, let's say tech stock, right? Or a pharmaceutical that's highly volatile, I may not be happy right now. I may not be happy. I'm holding a grenade with the pin pulled. In the case of PSX, I've traded this since it's gone public. I owned Conoco when it spun off PSX, and I got my PSX shares at 28, I think. right? Sold them as high as 80, right? Bought it back, sold it. So I've played PSX over the years, okay? And this was specifically set up for a covered call swing trade where I'm going to buy the stock, sell some covered calls, make some money, we move on. Well, look what's happened. Of course, I don't have a stop, and it has fallen past my profitability window, or my line of profitability. So now I'm in a spot where any covered call I write above, right, or higher, the stock could go higher, right? And if my shares are taken away, I'm going to lose money because my cost basis is higher than I get my shares taken away. So I have to have my exit strategy. I get this question all the time. John, how do you deal with a stock where you bought it at 85, right? You bought it at 85. It's fallen. You're sitting on your hands. You don't quite know what to do, right? You start writing, let's say, a covered call at 82, and all of a sudden news comes out and it goes past 82. Now you feel like a dope. You're left holding the bag. We don't have to. We're going to utilize our exit strategies. We're going to know what to do in these situations, and hopefully for you, it's a profitable trade. Now, for me, what's a profitable trade? Let's go to the spreadsheet here. Notice I've done a couple things with PSX here. I've written a couple covered calls, collected a dividend, okay? Wrote another covered call. I currently have no calls out on PSX right now. The shares are now down to 75, 76. I even went so far as buying more shares to reduce my cost basis. So now you can see I'm in this sucker for 700 shares. I'd better feel comfortable with PSX to be doing this. Okay? You getting that? That should be ringing a bell right now. When you write a covered call, man, the first golden rule is, man, you got to own it. You got to own the stock. You got to sleep with it. So when you go to sleep at night, you got to feel comfortable that you own a great company. This is why I never talk about willy-nilly stocks. Okay? So with that said, I have brought my cost basis down to 79. Okay? So the idea here is I brought my cost basis down to 79. Actually, it's closer to 80. If the stock goes above 80, I sell it. I can make a green trade out of this. Not going to be much, but I can. Okay? And my nifty calculator here, I put in little numbers. And boy, that number's way off. Do not look at this right now. My point is, things for this trade are lining up where I might be able to get out of it, but I like PSX. I'm going to stick with it, and hopefully over the next month or so, I'm going to be able to make this a green trade. So what's the plan? I go back to what is the plan. I think the markets are trading sideways right now, so I don't know if this doesn't keep going lower. And boy, it's going to feel like the Whirlpool trade, right? Where it keeps going lower. In the case of the Whirlpool trade for me, I wrote the calls all the way down. Here I'm not so much. So I'm finding myself in a spot where, man, I got to start taking action. I have to have a plan. I need to execute the plan. And I think what I'm going to do this week is I'm going to review my spot on PSX. I actually might write a call up here and really start to play this and always have my exit strategies ready. That's what I mean by having a financial education when you do this, but we are going to be prepared. We're going to execute. I cannot just sit on my hands here. So I'm going to look to write some covered calls here. Okay? Hey, look, the point of this video, and what I want you to take away from it is, we all find ourselves in these situations. The markets fall. You bought the stock. You had expectations of this thing drifting higher, right? Writing those out of the money strikes, right? Collecting the big premiums, cash printing machine, all those beautiful ideas. And in this case, a great company has drifted. And now we don't feel empowered because we feel like we're going to wake up to that little bit of news that's going to rocket PSX 5 points higher. We're going to feel like a bag that we did not do the right thing. But that's not what in my case, that's not how I'm going to approach this. I'm going to start writing those little juicy calls just out of the money. I'm going to shorten my window. Right? I'm going to try to maybe write 3-week calls, 1-month calls, so it doesn't get out there too far for me. I could possibly buy the stock back, buy the option back. Yes, I'd add to my cost basis, but I can then write another up and out covered call, possibly covering that, right? And it becomes the game within the game, and it reinforces our exit strategies. Now, right now, this is a losing trade for me. It's not considered a red trade because I'm still in it, but man, at some point, I might have to throw in the towel. I'm not going to right now because I like PSX. We have earnings coming. I do not want to write a covered call. I'm sitting on my hands right now. I do not want to write a covered call through earnings because this thing could easily pop $5, right? The institutions like PSX, so this thing could pop $5 if they have good earnings. I need to follow my golden rules here. Once they announce earnings, then I'm going to jump into action and I'm going to really start checking my checklist, right? I want to make sure I'm writing tight calls on this, right? Doing the right thing. So the plan is to really make sure I'm doing my homework, write the calls, have my exit strategies in place. So, hope you learned something. Hey, look, I'm going to talk to you about, real quick before I end my video, looking at my totals. April was an absolute slow month for me. Boy, I'll tell you, opportunities did not present themselves. And I did not like my April month because remember what I've told you in the past. I told you in the past that I'm doing this as an experiment for me. Can I do this in retirement? Can I do this strategy in retirement to actually create income in retirement? And man, if I can't, then I really need to relook at the entire strategy. And man, when I look at January, January was a month that, look at that. January, a great month. My overall totals for the year surpassing where I set a very modest goal of 24,000 for the year of 2017, right? So everything's going gangbusters, but I hit a snag in April. We're not done in April yet. We're not done with April yet. As you can see, I have contracts. And by the way, before I go, I made a mistake right here. I made a mistake. I haven't talked about it. I think I'll talk about it in an upcoming video. It's a green trade. I made $155. I'm not sneezing $155, but I made a mistake. We're going to talk about that. Man, I broke a fundamental rule, and we're going to talk about that. But April is not a good month. But if my contracts run out in April, see that I have a couple. I have 3 April 28th. I'm going to pocket that 1,700 plus the 150. That puts me in that 1,900 realm. Notice I have a couple stocks here that I bought exclusively for covered call writing. Those will cash out as well. So we're going to add that total to my total. It's going to be well above 2,000. It's going to be a good month. So trading doesn't equate into massive profits. It's the quality of trades, right? It's the quality of trades. So I hope this video has both helped you with maybe you're feeling the pain like I am with a stock or two that you bought higher. It's now lower. What do you do? What's the plan? Okay. Exit strategies, ideas. Okay. Don't lose your momentum. Don't lose your motivation. Okay. And with that said, hey, look, I do appreciate you guys watching my videos. I do appreciate you hitting the like button. And hey, I hope you learned something. And until next time, I hope all your covered calls are profitable.
All I see is signs. All I see is dollar signs.